welcome to this month's edition of Bullish on Business. This is your host, Certified Master Coach John Randall. We hope you're doing great and staying bullish out there. We have a very special edition for you today. The markets have hit some headwinds a few weeks ago. We have D2 investment guru Drew Watson here to help. He's going to talk to you about what he's doing in his portfolios, what he's saying to clients, and what you can copy in your practice. We also have a special edition with D2 coach Sherry English, who's going to go over some great sales concepts. That first conversation with the prospect, how to reel them in and attract them without seeming so salesy or so pushy. Really great information. She's also going to talk about the launch of a new program called Smooth Selling to boost your sales skills for you as well as your team. So everyone stay bullish out there. We look forward to seeing you in Miami at the end of March. Everyone take care and we'll see you soon.
Welcome to the Dynamic Directions Bullish on Business video series. I'm your host, Alistair Watson. Thank you for joining me. We've had a tumultuous month in the markets, mainly driven by interest rate fears over rising inflation. We've had probably the first correction in about 410 or so trading days. And we've had a pretty decent recovery from those lows. Interest rate jitters are definitely pushing everything, and we'll kind of go through A to Z, locomotive to caboose, look at everything that's been affected in the markets. The tremors all started after the Federal Reserve and economic data that came out that said average hourly earnings increased much more than what people had thought towards the end of January. The market hit a peak, I think, January 26th, and by February 9th, the S&P intraday was down about 11%. Now, the fear was this increased hourly earnings would create inflation that would just kind of take over the economy. To this point, inflation numbers have gone up just a little bit, but I think the Treasury rates that responded by going on the 10-year all the way up to almost 2.94 were a little bit overdone. As of the date of this session, this taping, we're back down to 2.84 on the 10-year Treasury, and we're around 2.3, I think, at the end of the year. So things are settling in, and just like stocks can't go up every day to the moon, Treasury rates can't keep going up every day to the moon either. So we've had a little bit of a reprieve. Volatility spiked because it appears that the New York Stock Exchange, for example, there was huge short positions on volatility, accounting for a net 160% short bets that volatility would continue to remain low. So once we got that first instance of volatility, all the bets on one side of the table caused almost like a domino effect to release a lot of these volatility trades, and in essence, selling begat selling, and fear crept into the markets. Since then, I think some of these trades have been shut down completely or wiped out, and stocks have returned to kind of more fundamental looks at what they think about the future. And even with the Fed Beige Book last week and the minutes from the meeting, is they do agree the economy is looking stronger. Inflation has peaked up just a bit, but they're still on target to raise rates, I think, the 3 times that they had discussed through the year. So what does this mean? Well, one, it does mean that probably, even though rates are down from their highs, the rate horse is out of the barn, and sectors such as utilities have just been mercilessly bludgeoned this year. It doesn't matter if they're a water utility, gas utility, electric utility, their charts all look very similar. Also, bonds, bond funds, bond investments, those are down similarly depending on the duration and the maturities there, anywhere from from break even maybe to down a couple percent. Now, one area that we are noticing that is really getting urged on to take higher allocations in would be international. S&P and their new information, just in their moderate risk portfolio, they recommend 20% overseas. We noticed that Ameriprise and some of their allocations are recommending as much as half of the equities be positioned internationally. So we recommend you definitely look in these areas. Now, rising rates also is typically a big headwind for REITs. Some REITs have performed better than others. Our BXMT has continued to hang in there, but others in some of the Ameriprise model portfolios, such as DLR, have taken quite a bit of a beating. On the flip side, technology continues to perform very well. The NASDAQ has pretty much erased most of its losses. S&P is right behind it, coming back up. Healthcare has done well. I think big winners potentially further in the future would be financial stocks. Financials have traditionally performed very well in a rising rate environment, as they can reprice their loans faster than they will reprice deposits. So these are all areas to take consideration. But the big winner so far this year, and I think it has to do with the budget process, has been defense. I think Boeing, as of this morning, was up 20% for the year. Lockheed's not far behind. So aerospace and defense names have continued to do very well. One idea for your larger clients that have cash would be looking at 90-day Treasury bills. Last week we priced, got some trades in at 1.63. Those have done well. We also know that in brokerage you might want to look at 90-day CDs. Those rates are creeping up. So we definitely want to continue to look at cash alternatives as well for our clientele. Now, what do we suspect for the next month? I think that volatility is here. The guys at BCA, they've kind of changed some of their outlook. They feel like we're kind of in the latter innings of this expansion, maybe a replay of the late 1990s, where we'll have volatility kind of creep into the mix. But by and large, I think the best way to protect your clients is to have a very well diversified portfolio, not only within stocks, bonds, alternatives, and cash, but also within different sectors of the economy, that when the going gets tough, some of them will do better than others, as what we've seen just here in the last 30 days. Other things to think about in the calendar to talk to clients about would be as we get closer to the midterm elections. The middle of March, there's a special runoff election in a traditionally Republican Pennsylvania district. This doesn't have all the tawdry details of the Moore election in Alabama, and this might be more of a pretty good Republican candidate running against a pretty good Democratic candidate, and we'll see what happens. A lot of the news outlets are reporting that this might be a prelude, let's say, to the midterms, and I think we'll just see what happens. This is the seat that's being vacated by, I think, a multi-term Republican holder, and we shall see what goes on. Be that as it may, with an eye towards the geopolitical risk, one thing we've noticed for sure is oil prices. Oil prices finally punched through 60. Before the sell-off had gone over $66 a barrel. As of this taping, we are over 64 pretty easily on West Texas Intermediate crude. Chevron is still $20 below its highs of late January, which it topped 133. We're at about 113 and change today. But crude prices are within $2 of getting back to where they are. I mentioned that in relation to geopolitical risks because although the U.S. has become the swing producer of last resort, it's clear that some of the uncertainty going on in the House of Saud transfer of power to KSM from the aging king will definitely put a bid under oil prices and hopefully send those up, as well as some of the stuff that's going on now in Syria has reemerged, as well as Iran. With that said, I would expect things won't be exactly smooth sailing, but pretty good sailing as we go in through most of the year. I would expect periods of volatility to flash, but also the underpinnings of our economy look pretty good. And I do agree with Warren Buffett that I think the real fruits of the new tax plan probably will not be seen until we get out into late third quarter. Late second quarter, early third quarter, when the IRS has had time to release full guidance and companies have had time to redo their capital planning and budgets for at least 2019 and beyond. With that said, we look forward to seeing you in Miami, and may the trade winds always be at your back and the sun in your face. Thank you.
Welcome to this special edition of Bullish on Business. This is Certified Master Coach John Randall. With us we have D2 Coach Sherry English. Welcome, Sherry.
Hi, John. Thanks for having me.
So today we're going to talk about a special topic that a lot of advisors, a lot of associate advisors ask about, and it's that tricky situation of how to really engage a potential client, that prospect, especially in a social setting, someone you may know, someone that you're in conversation with. And Sherry's going to take us through some universal technique that you can use to not really seem so salesy or pushy, but to get your message across and to get these people to become clients. So Sherry, take us through this. What's a good way for advisors to approach these sometimes awkward conversations with a prospect?
Right. Well, the first thing that I always kind of like to talk about is that most people don't grow up thinking, you know what I'm going to be? I'm going to be a salesman when I grow up. And when you hear, people talk about salesmen, the words they say are not always the most becoming, but everybody grows up thinking, I'm going to be a hero. And so we look at this as not so much of a sales process as kind of becoming a hero, much like, say, a fireman. Because what happens is as a fireman, I tell people, if somebody came and knocked on your door and they had an axe in their hand and they said, hey, we're going to chop a hole in your roof and we're going to douse your house in water, you'd probably say, no thanks. But if you stepped outside and saw flames coming out of your ceiling and you knew your children were upstairs, you'd be begging them, please chop hole in my roof, please douse my house in water. And so that concept is the concept that we use when we're talking about sales, is that you're not selling them something. You're finding out what is the problem they have and how can you help them fix that problem. What is the thing that they urgently need? The same way as if their house was on fire. And so that's really the concept behind it, is how do you find out their problems? And the biggest answer to that is you start asking them questions.
So, I find a lot of advisors struggle just knowing what to ask. So, how do you know what questions to ask these people?
Well, one of the things that we've kind of developed is the letters SMOKE, smoke. It's just kind of a good way, and if you'll keep that in your mind, you can remember kind of an order of questions. And the first one, S, stands for set the stage. So, like, why are we even having this conversation? Would be setting the stage. So, hey, we're going to have this conversation. It's going to be, do you have a problem I can help solve is part of the conversation. And then the second thing is not every problem that every single person has do they want solved in that instant. So, do you want to solve the problem? And then the last question is, does it make sense for you and I to solve this problem together? And so there are a lot of ways that can be asked, but that's the essence of kind of setting the stage, which is the S of smoke. And then the M, the O, the K, the E, we can go through those if you want.
Nice. Yeah, let's go through the others. Let's go through the whole series of smoke.
Okay, smoke. So setting the stage is the S. And so that's kind of like, why are we even having this conversation? Do you have a problem? Can I solve that problem? Do you want to solve this problem? Excuse me. The M is to make the dream real. So what is it that they want to achieve in their life? And why do they want this? People don't buy. And, people buy a lot of stuff. Nobody likes to be sold, but everybody likes to buy. And the reason they like to buy is there's some emotional thing that connects them with whatever this thing is that they're buying. And so making that emotion seem very real to them, making the dream real, letting them build the dream as big as they want it to build, is the M of smoke. S is set the stage, M is make the dream real. So what do they want and why do they want it? What is the emotion behind it? So there's several questions that you can ask, but all of them kind of revolve around that. Like, if you could paint a picture of your retirement, walk me through. Like, if somebody's shooting a movie of your retirement, give me the plot line. Tell me where the stage is set. How make the dream as real as possible so they can really sense like this thing I want from an emotional resonance. So that's making the dream real. The next one is obstacles. Like, why aren't they there already? What obstacle is keeping them from getting there. So some questions you might ask about that is, what's the biggest challenge you've had around this dream that you just showed me, this wonderful vision of what your future could be? What's the challenge that's keeping you from getting there? What obstacles are stopping you? Why don't you have it right now? So that's kind of what are the obstacles, and really explore that, because the thing that makes people want to buy is that gap between what their vision is of what they should have or do or be, and the reality of what's stopping them. And that gap is where you're going to be able to create some solutions. And if you don't know that gap, how can you show them any of the solutions? The K in smoke is to know what they've already done and what they're willing to do. So if they say, I want to retire with X number of millions of dollars, well, where are you now? Are you, have you already started a 401k? Are you already doing profit sharing? Have you already started saving, in some sort of accounts? What have you done? And then what are you willing to do? If you're standing here and you know where you want to be is there, what are you willing to do to get from here to there? So those are really kinds of conversations, and those are the kinds of questions you would ask. If you want to retire in this style, you're going to have this much of a nest egg. Where are you on that nest egg now? What have you been doing to grow your nest egg? What are you willing to do to grow your nest egg? And then the last is the E, which is to engage them in a solution. I think one of the big flaws of people in our industry in general is we come in and we know the answer, and we just lay it all out for them. And really what you want to do is engage them in the solution. And so that would look like something like, how could someone like me help someone like you get there? Creating a plan is a lot of work. Are you interested in doing the work it takes to change what you're doing now into what you would want to do? When does it make sense to get started? Is this something you're willing to even resolve right now? Maybe when I build a dream and then you see the obstacles, is that something immediately you're ready to start on? So that's kind of the smoke. Set the stage is the S. The M is make the dream real. The O is what obstacles are standing in their way. The K is know what they have done, what they're willing to do. And then E is to engage them in the solution, not just roll it out there for them. So that's kind of the smoke concept of being that fireman, that problem solver, not this person who's slinging something at them that they should be forced to buy.
It's a really good approach. I love it. Now, it sounds like we have a new hot off the press worksheet where advisors can develop their own questions. So tell us about that and how advisors can get that.
Well, so advisors can get that by sending us an email here at Dynamic Directions. You can send it directly to me if you want, which is English, S as in Sherry, English like the language, at dynamicdirections-d2.com. Or honestly, if you just go to the website and send it into our info site, we'll be able to get it to you. But it kind of lays out the smoke approach and lets you come up with questions on your own that feel really, authentic and natural to who you are, that you would ask these questions. And so also, so you can know what is the problem you solve and why should somebody get started on it right away. So we kind of start with the why, and then we move into kind of technique of how would you ask these questions. And again, you can just send an email to me, senglish@dynamicdirections-d2.com.
Excellent, Sherry. Sounds great. So we'll have that email address. Actually, in the email, you got this video link, and it's in there. Also, if you click on this in the comments section below this video, you'll see the email there. So get your worksheet, work on your questions, build your list so you can have the smoke conversation and reel in more and more prospects. So, Sherry, it sounds like we're just scratching the surface here. It sounds like there's a lot more to this. So how can people find out about more about this concept of really smooth selling, and what more is there? What can people do if they're interested for more?
Well, we are launching a group program, John, and I'm pretty excited about it. It's going to go through the whole concept. One of the big things we at Dynamic Directions believe, as you know, is that your belief systems drive your behaviors, which drive your results. So we're going to start with your belief systems, and then we're going to build out a process so you know exactly who you're selling to, exactly why they would buy from you, what problems you solve, and you have inside, in a very authentic way, you have the ability to ask the questions that will drive business your way. And this is going to be a program that we're launching, I think, April?
I think right at the beginning of April 2nd.
April 2nd. So, and in order to get in touch with that, I'm assuming we can just click on the button, John?
Absolutely, yeah. So there'll be information to sign up. I think we'll probably deadline in mid-March, but right at the beginning of April, we'll be going. So need to act now and make sure you get a spot in smooth selling if you want to increase your business, your GDC, your skills with really simple approaches like Sherry brought out with smoke. Let's get you registered. So great stuff, Sherry. Awesome concepts. And like I said, we're just scratching the surface here. There's so many great things we can get into. So, yeah, please register. Look for the information in the email here. You'll get probably multiple emails about it. But let us know. Let me know. Sherry know if you have any questions about it. And you saw Sherry's email there, senglish@dynamicdirections-d2.com. Email her with any questions. But great stuff, Sherry. Thank you for being on today. And all of D2, stay bullish and get big results. And we look forward to seeing you at upcoming events. Everyone take care.